Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say or do should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of February 2nd, 2025. And in this week's episode, we are going to take a look at the big news that hit markets last week around DeepSeek and its venture into AI and how it just absolutely rattled the markets across the globe, from chips to PC hardware makers to energy companies to infrastructure. Just nothing was spared. If it had some tie into AI, it was impacted by the DeepSeek news. And so we'll kind of digest our thoughts on that and maybe mention a couple of things, potential plays that we had out there where we're kind of surfing the wake of those big ripples that were just rattling through the market there on this past Monday. And then that'll probably lead us into a few general thoughts on artificial intelligence and the market and stuff like that. But before we hop to this week's content, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you'll find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. So look us up there, subscribe, and if you can't find it, let us know and we will get it there. But let's hop to this week's content, Viper. And Viper, I don't know if you were paying attention to the equities market on Monday or not, but I speculate that this was even felt in the crypto space. And what I'm talking about here is the DeepSeek company out of China. And to be honest, before this weekend, I had never heard of them. I don't really follow the AI space super closely, so maybe they've kind of been there lurking in the shadows. But the big news that had come out over the weekend was that they had an AI engine very similar to OpenAI's ChatGPT, and it was trained and operating on lower power chips. I don't actually remember the specific chips that they were using, but they were much lower power, and that and they were achieving performance that was considerably similar to ChatGPT's performance. And different people within Silicon Valley and people that had kind of interacted with it had written some stories and said, yeah, this is pretty good. It's amazing that they did it on this fraction of the power. And that just absolutely rattled the narrative. And the narrative here, if you haven't been paying attention to AI and the chip space and all of that, is that NVIDIA is king of the hill, and they have these beautiful, magical chips that no one else can produce, and they have orders of magnitude better performance, and they have orders out the wazoo, and they're backed up, and they can't have enough capacity, and so it's just growth that has just absolutely propelled NVIDIA to just stratosphere valuations. And we're talking a mega cap stock. And I remember, I mean, it was probably about a year ago, Viper, on this show, we were talking about a 30% upside move to NVIDIA, which is just unheard of for a mega cap to have that much valuation and still move that much. And so everything has been built on this narrative with the NVIDIA chips and the power consumption that it's going to take. And that has driven up energy companies that are basically delivering power to these data centers. It's driven up companies that are involved in the cooling of the data centers and the power delivery of the data centers. It has impacted natural gas prices. Because natural gas is one of the cleaner energies, and people want clean data center power. And NVIDIA, basically, Jensen Huang has come out and he said, our vision is that a data center becomes a compute module. And so it's no longer like a colo of a data center that, different companies put different racks and servers in. He's like, we will have giant Walmart-sized boxes that will be part of our AI compute engine. And this has just driven up valuations on all of these types of companies. I mean, there's industrial companies out there, which typically would have traded around a 12 to 18 multiple on their price to earnings. And, they're trading at 50, 60, 70 times their forward earnings, which is just crazy valuation. And then a player comes out into the space and says, hey, guys, we just did all this stuff for a fraction of the power and cost in these lower commodity chips. And we can get into whether or not it's a true story or a fake story. And honestly, it doesn't matter, because what I want to really call out in all of this news is how sensitive and how volatile the market reacted to this. I mean, what was largely kind of a benign story when it comes to technology. It's, some new company has something. Oh, that's neat. And then to wipe away in one day $1 trillion of market valuation. In kind of the intro, I said, hey, if you can wipe away $1 trillion in market cap with just one tiny event, you might be in a bubble. And people are arguing right now that, this isn't a bubble. This isn't a bubble. This is just, there's so much more to run. And, kind of thinking back on different bubbles in the past, right? Nobody ever really recognized it as a bubble until it goes poof. And I'm not saying that this is the poof moment, but what I'm kind of saying here is this is a very, very broad space that has touched on all kinds of stocks that you might not normally think of. One of the ones that got hit huge was Super Micro. What do they make? Well, they make racks and they make cases. They don't really make anything with chips and stuff. Natural gas is one of the ones that has just plummeted lately. And yes, there's some warmer weather out there, but largely the natural gas demand is faltering on the idea that maybe the data centers won't need to draw so much natural gas power. So that's kind of the recap of some of it. And before I kind of get into maybe some of the trades that I took or some of the opportunities that I see, Viper, let me give you a chance to kind of, did you see it on Monday, or was this one of those things that somebody told you about on Tuesday or Wednesday? And you're like, what, really? Or did you see this firsthand?
It was pretty unavoidable. It was all over. So I was not, exposed in the equities world, but it definitely tore asunder crypto world. It didn't really help, I guess, that I don't know. Well, maybe the news came out Sunday and it just didn't hit the market until Monday, because crypto started just absolutely getting obliterated Sunday evening, Eastern time, into the night, overnight. Let me check this real quick.
I think there was news that came out on Sunday. There was two things on Sunday that I think really started getting things moving. The first one, I think, was this story. The second one was there was talk on tariffs and stuff that the president was going to enact immediately, and people weren't really expecting some of those tariffs out there. And that typically creates kind of a clawback on risk-off trade, but it wasn't long before the AI news completely swallowed all of that talk.
Yeah, so it was like a 6 to 7% peak pullback on Bitcoin, which is probably a similarly large move to seeing an index just absolutely dunk. So yeah, it was felt across the space. There's a current meta in crypto land right now around AI tokens. It's just another name for meme coins, really. Like, there's not hardly anything behind them, but because this news was particularly AI focused, AI related, those things just absolutely nuked. So yeah, I definitely felt it, definitely saw it, and it was. I hate to say it because we say it all the time, but it was an accelerant. It was a catalyst. It was, honestly, like, I guess picture's worth 1,000 words, right? So, just real quick, let's hop over to kind of why why I say that. I mean, I hate to say what we say all the time, but catalyst, news, all that stuff, accelerant. So pardon my chart here. I got this is one of my very active charts that I'm trading on, but I do things. We got the all important clown where that was where Bitcoin goofed everybody, clowned us. We cranked up and then failed to make a new all-time high. So you got the anyways, what I want to really call out here is there was a move that we've been talking about in the Discord for a while now, long since before Sunday. And so that's on my chart here as this red arrow. Let me slide that over a little bit. This is not, isn't like a guaranteed move or anything, but, as you come to the Discord and check it out, just lots of conversations around potential futures and moves that are potentially happening. And so one move that we've been keeping an eye on is this red arrow for Bitcoin, where there is from the weekly candle. And so I say weekly because we're looking at the 1 hour right now. But on the weekly, just take my word for it, and you can pull up the chart and see for yourself that this big move here on the left side, this big gap here, from the weekly chart would be super healthy to fill. It's not required to fill it, but a pullback and a test of this bottom green range is totally within the realm of possibility. So we have this on our chart already. And now if we zoom into a little more recent price action, and maybe to make this a little less noisy, let's jump to the 4 hour real quick. So we had the clown face here where we failed to make a new all-time high. We pulled back and we just really started squeezing here. And so leading up to Sunday night, which was the dump that you see here, it was pure. It was in this complete compression squeeze. And so we were expecting a volatile move, as tends to happen out of such a squeeze event, where you can just see the price just swing, whips on back and forth, but still to a very common median point. And so the reason why I say catalyst and not really like it changed anything is this top range here in the red. You can see that we were squeezing below it. So we kept trying to break above it and we kept failing. We would get these 4 hour closes above, and then all of a sudden we couldn't even close above the range. We were just sweeping through it with wicks. So kind of, was not that much of a surprise that it dumped. And obviously the speed is always an unknown variable as to when and how fast, but the fact that we went down was not that much of a surprise. And as you can see, price action wise, we swung down, we tested the bottom of this green range here, and we're slowly working our way back up. That was that. I saw that happen in real time because, it was just, I don't know the exact numbers, but lots of billions of dollars were equally wiped out of the crypto space, the market caps across the board, things were tanking. So yeah, it was a very active event.
Yeah, and honestly, this kind of brings me to a little bit of that thesis trading. And we haven't really talked on this for quite a while. I mean, I think if you go way back in the episode banks, we kind of talked around trading a thesis. And a thesis could be a broader theme of things. And I think that's where I was kind of alluding to the AI trade. People's thesis has gotten really, really narrow. And so I personally think that this is a buying opportunity for a lot of stocks. And what I mean by that is their thesis is so narrow because they have narrowed in and said, oh, NVIDIA is the way. AI's path must run through NVIDIA. And while NVIDIA is a major player and likely going to be a major contributor, I think the theory there got so much that it was the only path available. And as soon as that path got some disruption to it, everybody was like panicked selling and valuation just really dropped. But if you think about it, is this the end of AI? No, it's not the end of AI. Is it the end of companies clamoring for market share and clamoring for their piece of the pie? No, it's not. And so I think that's when you got to kind of take a step back and say, okay, of all these companies that just got thwacked as collateral damage to this because so many people had been banking on one particular way of this, which one of those companies might stay around? And so for me, that trade was natural gas. So I looked at this natural gas, smackdown, if you would, to say, hey, whenever you get a big drop. So this is where premium selling is very interesting because two things are true when you get a big drop. One, you're going to increase volatility. So whenever you get giant price swing moves, volatility will typically increase. And the bigger and more violent the move, the bigger that volatility is going to drive. And that is going to drive premiums. I always draw the analogy to insurance. The more stormy the weather, the higher the insurance premium is. And when you're selling that insurance premium, that's good for you. And the other one is whenever you just get really strong moves, you'll always get some sort of reversion to the mean. It might not be a back to the way things were, but you get some overreaction and a crawl back to a more normal. So I think of it like a spring, right? When you let the spring go, right? The spring is going to oscillate and kind of center back to a median. And that, whenever you get these moves, it creates giant premium selling opportunities. And so I took that in natural gas because natural gas is not something that's narrowly focused to the AI trade, right? Natural gas has utility all around the world. Natural gas is tied to so many different things, clean energy, all different kinds of initiatives. And when it got artificially hammered, the volatility spiked. Well, volatility spikes, I can get more premium. And if I still think that, natural gas is going to return to a range or become less volatile, all I need is for time to pass. I don't need it to move massively in one direction or another. I don't have a directional bet on it. I basically just opened up a strangle. So I sold a call and I sold a put, and I'm going to let time premium kind of go away and hopefully stay within that range of the next month. And so that's the kind of stuff that I'm saying look for. Maybe you think, hey, if NVIDIA is not the way, but data centers and AI are, well, who's going to build all the racks that are going to store all the things in the data center? Maybe that's Supermicro. So maybe they got beat down by 35%, 40%, but maybe that was too much in your mind. And so that's what I'm talking about when we talk about surfing the wake. You get this big splash, this big kerplunch, and it just sends ripples all through the market. And a lot of those ripples are overreactions to things. And in the case of dips, that offers a tremendous buying opportunity. If it had gone the other way and it was a giant rocket ship up, that might be an opportunity to sell and take some profit off the table. And then build back the position when you get that elasticity move down and kind of recenter back up. So Viper, I don't know if you have any thoughts on that, or if there was any ripples that you can kind of foresee, or that might impact anything that you look
at. No ripples per se, but you saying that did remind me. Someone did ask me, I guess it was late Monday afternoon, if this meant if I was going to buy NVIDIA. Because it was, this big wipeout event. So of course, people new to the market or not, people that have that view of like something's way down, it must be a buying opportunity. And so that's kind of where the question came from of like, oh, okay, so you're saying it's down, it's way down and it's maybe an overreaction. So does that mean you're buying? And I feel, and so my answer to that person was twofold. One was obviously, it really depends on your strategy. If you are a long-term investor, very intentionally using the word investor in this context, you're a long-term investor, and we're just talking NVIDIA, not really the ripple effects and the other opportunities that this worked. Long-term investor, then absolutely any massive slash to something that you're a long-term investor of, like that's a DCA opportunity to scoop it up immediately. But as we've talked about, like I do have a couple investments, but mostly swing trading. So so then my answer on the trading front of what I personally do is I was like, no, not at all, because I'm trying to trade swings, not buy and suffer these drawdowns and wait for the good profit or whatever. And so on that initial move, that's a knife catch. And so we can kind of see that if we jump back over again one more time to the NVIDIA chart here. This is what I'm talking about, where it was. So these are two key ranges that I charted, and I charted this when the person asked because I had not had this chart made at that time. But we see the drop, and we see that we dropped right to this. I called it a weak but notable range. I don't know that adjectives are necessary. A range is a range, and this is a range. So we dropped to it, and we kind of bounced off of it, that elasticity. But then we kind of hit this next range that's above it, and so far we've kind of been rejecting off the bottom of that. And so this is what I mean when I say, as a swing trader, I am not buying because this is a reversal event. This is a new lower low. And so you don't knife catch. The knife is for a profit. And everything's hunky dory in hindsight, but there are short setups up here. So if you were in a short, the knife catch is for your profit. That is for your profit taking. Your order sitting there. We knife down. Boom, you're filled, and now you wait. So for buying, you want the setup. So the setup is we dropped. We're rejecting off the bottom here. Personally, I have this $90 to $100 range, kind of, as a key range. So if I was swing trading, I would be either looking for a support confirmation, which we have not gotten yet at this range, or more interested in having a resting limit order, perhaps, or something down here at this key range. Come test this, set up for support and go from there. But I thought that was interesting to call out as far as the buying opportunities that certainly across the board, shopping around for those buying opportunities, those ripple effects. But we'll call this ground zero because it's NVIDIA. It was at the center of the story almost. That it's buying if that's accumulation is your game, I would say. Which did bring me to one other point, because I did not follow through actually looking at the chain. But when I saw this move, the first thing I thought of was, I was like, man, like on Monday, like if this is my range, like again, I'm not taking this trade, but if I was, and I'm like, yeah, like $100, I'd be in on NVIDIA. Did you happen to look at the options chain? Because the first thing I thought of after I drew this chart is I was like, that's probably not terrible for the volatility spike of this move down. If I went out and sold a $100 put, did you happen to look at the options chain? Would that have been? I mean, I guess as a naked put, it's always viable. But did any of the volatility spike your radar for your volatility play?
So yes, 100% it did. Now, I was actually just going to ask you to leave this chart up here because this is a great example. This is just pretend this is nat gas, because nat gas chart looks kind of similar to this, where you got this big move down. You were kind of riding up, and you started getting this move down, and where you are right now is kind of in the center, if you would. So when I say in the center, it says you got your key range a little bit lower than there, and you're saying, hey, this is where I'm thinking we're going to, we might come back down here. And if we're going to continue the bull trend, I'm going to bounce off that and go back up. But you also don't know, like you said a swing trader wouldn't enter here because the setup's not quite formalized. But it could gain that mid range that you have, where it had some slight resistance, and you could be going back up to challenge the all-time high again. And this is exactly the type of setup where I would put on a short strangle. And the reason I do a short strangle here is because you're fresh off that volatility spike. Your premium is up. There's uncertainty in the market. There's blood in the water. People are scared, right? So you got your volatility really spiking at this point, and you got your confidence backed a little bit that you've got two likely stopping points, one on the upside and one on the downside. You don't know if it's going to be a reversal or anything, but you're probably going to get some type of reaction. And you balance all this with the amount of time, right? All that you need is time to burn away. So it doesn't matter if it gets up to that top end and kind of stalls out and putters, because time is decaying away and you can probably close it out for a profit. And if it then rockets up after that, who cares? You know, your play is on that short volatility, that volatility spike. And so this is very, very similar to the Nat gas chart that I looked at. Now, I did not get into the NVIDIA chart because the NVIDIA volatility just wasn't quite elevated enough from a historical IV percentage. I really want to see that above 50%, 60%, but because NVIDIA has been so stinking volatile, I think the IV percentage was still in the 30s or 40s after this move. I'm not 100% sure on that, but it just wasn't a trade I was really looking at. Plus, that NVIDIA trade is ground zero for that narrowly scoped thesis that I'm talking about, right? And I was out there fishing for what's the collateral damage where the news was overly harsh to something that, you know, really had no impact, right? That's where the volatility is going to fade away into oblivion is, oh, yeah, nat gas, that's used for other things. Or, you know, server racks, that's used for other things. And that was one of the other reasons I didn't really look at the chart of NVIDIA on Monday, is because you're really in kind of that knife catch ground zero. Yes, time premium is on your side, but if that thesis is really turning over, then look out below. Who knows? So I was really looking for that volatility spike and collateral damage.
Yeah. And that actually is something that I didn't think of. I didn't obviously think of at the time, but I think it's really important to call out of specifically of that IV percentile, that historical volatility, because like we just saw when I was zoomed into this chart, in my head, because it's not my strategy, because I don't play volatility nearly as hard as Sprocket does. All I saw was this big gap, and I was like, oh, that's got to be, and again, I didn't follow through and look at the options chain, but the first thought was, there's got to be some really juicy premiums out there. And I'm sure there were, like you said, but what really clicked just now was when you said that historical, it was not that elevated. And so I zoomed out on the chart here so we could see, like, okay, yeah, so that gap, I mean, it was significant. You know, we went from close to open, a 12% jump, which, I mean, that's not small. But historically, if we're looking at like the left side of this chart, like this run up here, like these gaps, I mean, we're looking at the daily chart. And so these gaps on various opens, where we're gapping up 5%, 5%, 5%, that's all playing into that historical volatility. That's part of the calculation of, was this current gap significant? Yes, it was elevated, but as it relates historically, like, oh yeah, look, this chart just jumps around a lot.
Yeah. And I can't emphasize that historical volatility is so important in premium selling. It's one of the things I kind of ignored for a little while because I thought, oh, I'll just look for, you know, volatility of a certain level, which is basically your spot volatility. And I really found that my success was kind of muted if I wasn't paying attention to that historical percentile. And you really are looking for the stock compared to itself over the history. And it's really that historical extension is really where you find the sweet spot in kind of pushing your strikes out and getting some real good contraction.
So I think the last thing that this whole event really showed to me, and this is both in crypto as well as equities, but certainly on this NVIDIA trade, was, you know, just like you said at the top, as far as this is kind of what happens when something is so over, I mean, I guess I'm going to say overbought. That's not entirely fair to say, but it has been overbought. Um, and I think that reaction to all things considered, like this is a pretty, I mean, I'm not going to say it's a small news event, but it's not this nuclear news event of like the world of AI just explode. Like, no, somebody came out with some competition. Like, that's it. Like, that's a very normal thing to happen in markets is somebody comes with a competitive product, all other commentary around that product aside. And so I think that emotionally it shows how potentially overbought the asset is when the smallest little thing sends shockwaves of jitters, and it sends those shockwave of jitters because people largely are so much in profit. You know, it's a thing that's been running forever, and the more that it runs, the more that you're like, should I leave? Should I get out? Is this it? So you get that tiny little bit of news, and then all of a sudden, like, that's the thing I was looking for, and everybody collectively decides that, and then you get a more potential overreaction of the market that was pent up. I guess maybe that's more of it, that the market wants to prepare itself for potential futures. And so the more that everybody's deciding one particular direction, more energy there is, that's kind of kinetic energy there is, that's stored up in there, that once that shift happens, that it just kind of shoots out.
Yeah, I totally agree, and that's kind of the one thing I want to kind of bring up to this. I feel a good analogy to this is the game musical chairs, where you know you got all these people crowding around the chairs, right? And everybody knows the music's going to stop, right? I don't think anybody goes into the market and says, "Wow, this thing is going to go up forever into infinity and beyond." Like everybody knows the party is going to end sometime, but nobody wants to be the one that leaves the party early. And so as you draw more and more people to the party and you got them walking around these chairs and they're walking around the chairs and nobody wants to be the one that doesn't have a chair to sit down in. So they just kind of keep going and keep going. And then as soon as something starts to take, effect, the music maybe sounds like it's stopping, everybody runs for the chairs. They try to grab them and they try to get their position, cash in, as you said, on the sale. And everybody panics because they think this might be the time the music is stopping, and everybody tries to run for the exits. And that is really what kind of causes those things to go pop. And the part that I wanted to bring up in relation to that is you also have to remember that the pricing of the market is really forward-looking, and it's forward-looking from the perspective of the populace opinion, if you would. And what I mean by all of those words, right, is everybody was locked into NVIDIA being the only way that AI is going to work, and there's no other challenges and nobody can touch them, and they're going to sell to the whole world and just rake in all this cash. And that's everybody's thesis, and that's what's priced in. And then as soon as cracks start to show in that, as soon as a tiny little competition comes up, and I would hardly even call this competition based on what was announced. It was just here's this idea of these other people here. We don't have any evidence to back up their claims, but they just made these claims, which is, to me, even more alarming that you got this type of reaction from unfounded and unvalidated claims, right? Did they really have this? Who knows? But the market didn't care because everybody thought the music was stopping. And to me, that is a strong sign of hey, there might be too many people at this party. And so I think that's a good thing to keep in the back of your mind.
Yeah, just to continue the analogy one step further, the musical chairs, I would say that this equates to the song that's playing is a song everybody knows, but everybody forgot that there's just one extra beat of a rest in the song. Like it's still the song, but there was just one extra pause that everybody forgot about, and that caused them to jump in their chairs. Because like you said, this is not necessarily a threat to NVIDIA particularly. Like it was an AI model, first of all, so it was software related. Yes, it runs on the hardware, but that's NVIDIA's business is still the hardware. So yeah, I think that's certainly a worthwhile analogy to sit and ponder on for a little bit about market jitters, if you will.
Yeah. And the other piece that I would tie into this, which maybe this is, you can consider this my glimmer of bull hope out there. But think about this. Let's just for a minute say that this DeepSeek is 100% validated, and oh my gosh, they have discovered the same generative AI power at a fraction of the cost, both from energy, chip, data center footprint, right? Everybody might be, running for the hills saying it's the end of the world. We're never going to hit the sales targets that we're going to hit. But just stop for a minute and go back to what we always talk about and say, what makes it tick? What's under the hood? And ask yourself, if generative AI became cheaper and easier to roll out and easier to scale, what other things might bloom in an environment like that? Right? What other software solutions might come out? What other aspects of this thesis, right? This is back to that thesis training. What are the other areas you want to start looking at? Maybe if you're like, wow, if this scales and becomes more commonplace, maybe there is more ability for companies to adopt it because it's not going to be so cost expensive. Maybe there is startup software companies that are looking into generative AI, leveraging someone else's models and someone else's hardware, right, to run on top of this stuff. And now all of a sudden, the hardware and the engine is now cheaper, which lowers their cost, which maybe lets them do more innovation, or maybe it lets them offer their product cheaper, which then drives more sales. And so, this is one of the things in capitalism, right, where that competition drives benefit for the consumer, and honestly, it's going to create more opportunities for trading and investing. You just have to stop, don't panic, look at the market and say, what's happening? Why is it happening? And what can I gain from it very objectively? And I think you'll find that there is really never a reason to panic. So that brings us to the end of this week's episode, where Viper and I just kind of take a look at the AI space in general when it comes to different trades. And when you get that big rock, crashing down in the water, which just seems like a meteor has struck the earth. And you might have the perspective that it's the end of the dinosaur era or the end of something like that. And, what's going to come new? It's the end. Well, you can take a step back and say, well, is it the end, or is it the beginning of something else? Or is this really just an overreaction to things? And what type of trades are out there in the collateral damage or the ripple effects from the big quatouche that hit the market? And so I think all of that stuff is really important to keep in your mind. And it just goes back to, when you are in the trading game, in the investing game, you absolutely need to check your emotions at the door. Emotions are nothing but liability when it comes to trading. They will do nothing but get in your way, cloud your vision, cloud your judgment. And if you can take a step back and look at things objectively, you can make fact-based decisions and really think about things. And while everyone else is panicking, you will have clarity, and you will be able to find the trades that are going to turn that profit and turn that green. But you have to be able to check your emotions at the door and look at everything not as the end of all that is out there, but what is the beginning of? What are the other ramifications? Because when you get big moves in the market, either to the upside or the downside, doesn't matter. So often they are extreme overreactions to something. And they're extreme overreactions because a lot of the traders out there that are participating in the market are not able to check their emotions at the door. And so when people are looking for their market edge, right, I would argue that is still an edge that can be gotten today from traders, is to try and check those emotions, look at things objectively, have your strategy, have your things laid out. So when these things happen, you look at it at an opportunistic perspective. Like I mentioned, this thing went south, and what did I do? Did I panic anything? No, I said, this probably means there's going to be some volatility short opportunity out there for me. And then I thought about it and thought, well, where should I go for that? And that's the type of thing that you can do once you get comfortable with this stuff and you really step back and look at it with a fact-based lens. So hopefully you kind of enjoyed at least our perspective on this. Like I said, who knows if we're right or wrong, but hey, it's our opinions and we'll put them out there for you. So good luck out there, whatever you're into trading. Hopefully, you didn't panic sell or you didn't get tracked into something that went against your strategy or you bailed on your plan because you got freaked out about it. And then hopefully you're looking for the setups as a result of some of the market moves that have happened. We even got combined with the Fed minutes coming out. So that's always an opportunity that can present itself in the market. So good luck out there. Have fun. And remember, think outside the block.